What's up, everyone? How's it going? Welcome to today's market analysis / trade recap episode. Today is Wednesday, June the 25th, 2025, and today was another day where Powell was speaking, but we were able to take two mock trades, you could say, here today. We got one break even and one went to our TP. So it is what it is. We'll take the profit, but the main thing is we have to analyze and see what we did right and wrong. Now, again, like I mentioned, Powell was speaking today and Trump was also speaking at a NATO summit here today. So realistically, you should not trade during the market here today. And that's why we did not trade using our capital. We traded mock trades just to continue getting practice using footprint charts and much more. But let's dive straight into this. So let's talk about the overall pre-market game plan that we saw coming into this. Again, depending on the fundamental side of this, news wasn't that crazy. It was crazy seeing as Powell and Trump were speaking at the same time, but there wasn't any CPI, FOMC, any of that. So what we saw coming into the market was on a higher time frame, let's say 4 hour, right? We broke out towards the upside and now we're coming back up into these almost all-time high areas. So you have to be very careful here and use our past data in order to continue making assumptions. But what we saw was that we continued to break out towards the upside, made a retracement, continued to make up. We made a retracement, continued to work up, and then we swept this upper liquidity. Now, if you go onto the 1 hour, let's say, that's Bookmap liquidity, by the way, I believe, right? Let's see. Okay, that liquidity should have been there. I don't know why it's been moved up. Yeah, that liquidity should have been there. Yeah, there we go. But we had this liquidity there that has been swept. So to make it simple, we saw a continuation of an uptrend. Price came down, came up, and now we saw price. Hold on. Okay. Yeah, so that's what I was thinking. Alright. I'm working through this at the same time as you guys, just trying to make this simple for you and I. But essentially, like I mentioned, we were going through an uptrend. Then we continued to make structure on the downside, but we essentially swept this upper liquidity after this down move, and we held this level really nicely. Now, all this liquidity was made from that lower structure, but then after, we broke out towards the upside once again and swept this liquidity. Now, what we were trying to do is we were trying to associate a reaction and understand a reaction up here at this level. And if you take a look on our footprint chart, as you can see, you could clearly see that there likely was absorption here at these highs. But it's a very extended and consolidated type of range. So we aren't too constricted in terms of taking shorts from that area. And realistically, if you simply just take a look at the higher time frame context of the market, it simply looks like we're going to continue to head higher. At least tap into these levels towards the upside, towards the upside here before we start making any short side. So we didn't necessarily have a solid bias going into the day, rather if we're going to go to the downside or towards the upside. So we decided to come into the market trying to decide which levels we can work with, and depending on how we react at these certain levels, then we'll make a trade. And we had 3 levels. We had our V2 levels, 1, and we were approaching those V2 levels because after market opened, as you can see here, price started to move its way down. Now, we had our V2 levels, we had this 30-minute demand zone, and we also had lower liquidity. And if we had made a reaction to any of those, we would likely head up to liquidity and the 3-hour zone there. Now, in a rare occasion that we would have continued to go long here and we started to make barriers forming from there, I would have likely entered long nonetheless if we had Bookmap liquidity towards the upside, because we do have targets towards the upside like seen here. And you can see that I have charted down that there is Bookmap liquidity towards the upside there. So if we had moved up from there, we likely could have taken a retracement play into this level. Since we continue to go down, we wanted to see how we react at this level or potentially take a retracement play into those levels. So there's that. Now, what I want to do now that we've talking about how we went into the market, I want to talk about the reasoning behind both of these trades. And to do that, let's start right from market open and move our way backwards. And for your information, it essentially looks the same on NQ as well regarding that analysis. But yeah, so let's go back onto ES and check out the Bookmap. Okay, I was at market open, I just went back. And here's a tool for you guys, just so you can get a full screen on your tabs. Just eliminate that part in your link, type in embed / and it will embed it very nicely within your tab itself. There you go. And then all you do is go back to your time. As you're live streaming or as you're watching the live stream, it will be much more effective to move this around, and it's much more versatile, let's say. But we see here at market open that we expanded towards the upside, and now we saw absorption up here at this level, as you'll see. You'll see that on the footprint chart as well. We saw absorption here at these highs. We saw aggressive selling coming in at these highs after these buyers have failed to push through these different levels. And then let's keep going. Then you see the first signs of price breaking down right around 8:40ish. I know it says 9:40, but we're on Central Time. You see those signs of breakage here at 8:40. Now, look at how liquidity is. We're very blurry in terms of liquidity with both heat on the downside and the upside. So it's hard to tell, and that's with the increased volatility and volume we have right at market open. So we did not miss anything there, even though we did see absorption. Now here, potential trade could have been made upon breakout of that area, which would be 654, so around here, which is pretty late to the move nonetheless. And there's nothing to target on the downside necessarily, except for these potential 6130 areas, which I am noticing now. But other than that, let's keep going. Now, one other thing that I saw very unique about this area, right? After market open, we came down to this area strong, but then you see how buyers instantly recovered from that area and sellers were unable to push price down lower. Well, look at how it looks here on footprint. I should be extending this lower just so that it can be more effective there. Wait, so we saw large amounts of volume here near the bottom, and at the bottom we saw sellers actively and aggressively trying to push through and continue to push price down even lower. But we had passive participants at that level, passive buyers that were actually preventing these sell orders from going through the auction of the market and the orders on the market to actually push price down lower. Instead, we saw it get absorbed by the market, And after that, we saw aggressive buying start to come in, as you can see here, which then got rewarded. But then at 8:55, we saw aggressive buying come in. And this is very aggressive buying. You can simply see that with all these stacked imbalances that we're getting on top of each other alongside this heavy delta. So this entire candle, I'm not expecting it to break below this area quite yet without more reaction. But as you can see, it's hard for buyers to continue because there's so much liquidity at the top. So although there's such an imbalance, it's hard for buyers to continue to move up. Now here, we actually saw a lot of volume here near the downside at 9 a.m. So let's just move forward and keep in mind, this is where things start to get kind of special, because at 9 a.m., the book cleared up a lot simply because Powell started speaking right after 9 a.m. And this seems to be a pretty replicable scenario, right? We see the liquidity blur out prior to 9 a.m., but after 9 a.m., things start to get more simple. So now essentially how the market looks after that is we start to make our way down, and we made a recovery from that down move. Now, depending on how we react at these relative highs, can we break through those highs, or can those highs hold and we continue to go lower? That's essentially what I'm looking to see. And if we can break and continue to go higher and make a retracement, we can likely take that retracement to target these upper bookmap level, or potentially we get down to these V2 levels. Now, there isn't any barrier that we can work with for us to go short. As you can see here, there is a micro barrier there, but I don't believe we ever get into that. Here at 9:11, let me go back to that area to make sure. But as you can see, there's no barrier that's actually showing us that we can break through. And that's why no shorts would have realistically been viable at that point, because although shorts could be viable, realistically, what's stopping us on the order book from continuing this micro uptrend and just continue to head up until we take out those two levels? Nothing. So shorts would not be viable, and longs would not be viable as well, because this micro uptrend could easily be a small retracement of a larger downtrend move. Now, that puts us at 9:11 or 10-ish, 9 a.m., which is 9:11 inside of this time. And that's when sellers start to push through with strength, as you can see. Now, this is where I'm watching carefully, because as we saw before, in our V2 levels, in the overall range that we've been in, we saw that at those levels, sellers were unable to push down lower. Instead, sellers got absorbed and we flipped into aggressive buying. So I want to see how price will react here at these levels, and depending on how price reacts, we can either take a long reversal trade or potentially see a retracement and continue towards the downside. And take a look at how price is looking at that area. So as you can see here, we come down, and where do we touch? We touch into these 6148-ish levels. And at those 6148-ish levels, what I'm personally noticing is that lots of volume is being transacted near those lows, and unfortunately price isn't able to break through with heavy strength, right? Price is finding lots of agreement. Price is essentially finding lots of agreement here between 6150 to 6152-ish, right? And when we go below that area, not much volume is being transacted and sellers aren't able to push through. If sellers were able to push through, and if we saw a barrier above in which sellers could hold, then shorts would have been viable. But here we aren't seeing any of that. Now, because we had identified that and we saw all this volume being transacted, the first time when buyers popped in, we entered into a long position at around 6152, right around here. And we entered because we identified these two areas as seller absorption once again, because we saw a reaction that we wanted here from this area, and we entered simply off of this absorption. Now, it went our way for a little bit, right? But, and here you can see it literally went our way for a little bit. But unfortunately, as it was going our way, buyers were unable to push through higher. Throughout all of this, as buyers were trying to push up, buyers were unable to push up. But when sellers were trying to come through as well, sellers were unable to push through. So we're kind of trading between these range of absorption. The next candle, buyers tried coming in, were unable to come in. So because we identified that, we took risk off in that trade. When initially we took a long targeting this upper bookmap level with a stop below this overall zone, right? And because of that stop, we would have taken 17 points or 17 ticks. I mean, we would have positioned ourselves to potentially take 17 ticks in a loss. Although that wouldn't have happened looking in hindsight, it's always better to be risk off, as we did see that absorption occur. So we became risk off in the market as we started to 6151-ish, as we started to see that absorption occur. We saw that absorption start to occur, and we saw this start to pop up when previously that wasn't there. And those two are bearish signs. So we happened to exit. Now, although that's okay, the next trade was honestly a pretty good trade. We're still looking for signals to either take a short or a long, and for the time being, we're not getting any of that. I'm looking for a barrier to show up, and I'm looking for a big reaction to potentially show up. And after that, what we saw was quite great. We saw bar absorption up here at these levels with the seller icebergs, which is bearish, but now we saw the occurrence of a big and massive, but we saw a big and massive occurrence of a buyer barrier, as I like to call it. And this is 315 contracts. This barrier itself is larger than our target, which shows you something about the overall significance of this barrier. Because this barrier is so significant, it's likely that this is a big institutional player. And because of such, if we can come back into this area and sellers are unable to push through, I would be more than confident to take longs if we see a reaction off of it. And if we move forward in time, what this barrier actually does is it moves itself up to around this 5-1 area, gets executed, and you can see it get executed. And although you can't see it get executed here, you can see it get executed here. And you might be wondering, hey, we're seeing lots of sell orders, wouldn't that be a bearish signal? Well, no, because since we have Bookmap, we saw that lots of sellers were coming in at that level, but they were unable to push through because we had our big boy participant here at around 6151 levels that was getting their buy position actually executed. And now their buy position is executed while they are in market sell position. After that, we saw price lower a bit more, but then aggressive buys start to come in. We entered right as the aggressive buys start to come in, and right as we start to saw, right as we start to see a reaction off of that barrier. Because when we see something that significant and make a reaction off of it, it's a pretty clear sign, especially if you see absorption. And as you can see, where do we enter? 930. Do we enter 930? Yeah, so we entered at 930, which was not 930, in the 930 candle, right as we saw that reaction, which was at right before the 35 candle we entered. Now the next candle kind of did spook us out a little bit because sellers did come in after that. As you can see here, let's put it on 2x once it loads in just to see. Well, we saw sellers come in after that. Playback speed 2x. So like I was saying, we saw sellers coming in after that while we were in the trade. But these sellers were unable to contain that area and were unable to break through this relative volume area that we had previously as well. This 6150 area was holding very strongly, and again, we placed our stop right at that 6150 area, or a tick below it, just for that room. We placed a tick below it for that room to be given, and we saw price come down to almost that 6150 area, and then right after we saw aggressive buying start to come in. Potentially it's because of these buy icebergs. This participant came in with limit orders. Now another institutional position came in with icebergs, and as those were getting executed, price happened to catch on and push towards the upside. Sellers gave up, buyers came in, price started to move up very, very aggressively. And that's where we knew that we were in the green. After that, price continued to go up again, take out our level that we were seeking, this 6157 area, and that's where we exited, as you can see here. Now there wasn't any area to take risk off in this trade, so we did not take risk off yet. For example, if this barrier would have moved up towards this area, towards VWAP, we would have risked off at that area and positioned ourselves break even, but that did not show up, so we did not. We're working with the data that the market gives us rather than what we just have on simple candlestick chart. Again, oh wow, yeah, I wanted to say this too. At this moment, we saw a very, very big seller iceberg come into the market, and I had no clue what to do at that time. 15, almost 1,600 iceberg orders, sell iceberg orders came in as we were in a buy position. That is not a great sign for our buys at all, but it looks to have came in and got out pretty quickly, potentially spoofing the market. But after it got released, buyers continued to head up and take out our level, which happened to work out great for us. And that's where the trade went. So the takeaways from that trade, after the whole analysis which I just did, was that these retracement plays tend to work very well. When we start seeing clear absorption on the footprint charts, coupled with the barrier, that tends to work really well put in the overall context of the market. But if we get too early with our trades, for example, the first one, the reversal play, we entered at 920, and sure, we're seeing lots of volume there, but is this really seller absorption per se? I'm not 100% sure if this is seller absorption. We're seeing lots of volume at this area, but that volume does not align with this area right here. Now, potentially that long could have been good, but I would have definitely said for the first trade, look for more clear signs of confirmation before entering into those reversal plays. If we had seen more of a delta and volume cluster, like we saw here, that was opposing us, then definitely we could have entered in the longs. If we saw this, but at the bottom of these candles, that would have been great for the reversal play. But we saw it between these candles, right in the middle, and it just looks to see that price was fighting at that level rather than absorption being happening. So this could have been a potential incorrect interpretation of the market. So definitely want to be more careful when getting into reversal plays next time, but keep it up with those retracement plays, as that barrier and footprint combination seems to be working with nice significance. Now, one other thing I wanted to do before I end this video is I wanted to mark out and analyze after our trade as well, because as you can see, after our trade we started, and as we started to come into our bookmap level, aggressive selling started to come in and push price down heavily. Now we started to see heavy sellers come in and battle at this area. They were not able to get absorbed, although it does look like that. They were able to push down through. Now, potentially, this lower volume zone here that we saw on this candle held that strong seller amount down, but there definitely needs to be more data and testing to prove such thing with our strategy. But I want to go there and see how price is reacting to see if there's anything that we may have missed. See, now we are seeing the spread of liquidity start to move in a bearish way, with these continuing to move down. Potentially we can take sells down to 6143. That's how it's looking at the time being, because we saw aggressive selling come in at that level, which also broke this level. But I'm not too keen of that, because we still have that 6150 relative area holding pretty nicely that I do want to see break, because that was an area of high volume. And as you can see, as we started to approach that, we did see a large amount of volume start to incur within the market that did start to make buys start to come in, as we see in this 955 candle. But this is where that, oh wow, potentially we could have taken this trade, because this barrier was a tentative there, right? And we did still have that 6150 level, but we saw buyers trying to push through that level but were unable to, in which sellers had contained that candle. Now we start to make a reaction towards the downside, but I'm still looking to see how we react at this 6150 level. If you can break 6150 and flip that liquidity and touch back into it, sells would look absolutely phenomenal. Potentially here as well, but I'm not liking the fact that we're still holding the 6150 V2 level. And let's see how we react down there. It's on 2x speed, so it won't take as long as you may think, I hope. See sells start to come in with immense strength here, and that was in this candle. No, this candle. So we start to see sells come in and actually break through, and they were having struggle at that 6150 area, and that's where all this volume is accounted for. Large amount of aggressive sellers start to try and push through that level, and they were successful, and now they are getting rewarded. then they break down with another splurge of strength there as well. So now from that sell move that broke below that 6150 area, that splurge that broke below that 6150 area, as you can see right there, that made it pretty clear that we can likely head to the lower Bookmap liquidity level, which is below our 30-minute, which is all the way down here. So I am thinking that price can continue going down towards that area. But is there any place that we could have grabbed a piece of that pie? Well, if you look at the market, there was no barriers that we could have caught on, and price started to approach this level very, very quickly. And we tapped in that level around there. So although our overall analysis would have driven us to the right direction, unfortunately, I do not believe that there would have been a setup that would have allowed us to get in this trade below that 6150 area. The only thing that potentially could have been a possibility is right here, where we came back up in that 6150 area with the seller delta position. Then potential shorts could have been made, but I'm not keyed on that as well. There needs to be more testing done with this stacked delta when there's a flip, but from what I'm thinking, unless there's a barrier or a retracement into such after a breakthrough like that, that would have been in position ourselves in a much more safe place. But if we start to see more of this stacked delta liquidity reversal type plays, we will go ahead and latch on and continue to test these plays as well. So if we were to make a setup out of such, it would be where we take this and we're seeing how this will hold. We break through below that trade with heavy selling delta. We come back into that level. Buyers are unable to push through, and we're unable to even make much volume at that area as well. Sellers come back through with aggression. Shorts could have been entered around this area. 4.7 targeting 4.3, targeting down here, which if you take a look at it, might not be the best in terms of risk to reward. Above 5.1. Yeah, that's horrible in terms of risk to reward. 0.8. But yeah, something like that potentially could have been made, but more testing needs to be done with that. We'll keep that in the back of our mind for now, but something like that could have potentially definitely been done. Now, that's all I have here for today. If you have any other questions, feel free to join the Discord server. The link is in the description down below. It's completely free, and I truly believe that you can gain a thing or two out of it. Now, I'll see you guys tomorrow for the pre-market analysis session that will be live streamed tomorrow morning. But other than that, that's all I have here for today. If you want to take advantage of Footprint and start practicing using Orderflow tools like the Footprint and Orderflow for completely free, even with the small delay, you can take advantage of that right away by using our channel partners, including Addis, which is the Footprint software, using the link in the description down below. That's all I have here for today, and I'll see you guys tomorrow morning for the pre-market analysis session and later for the market analysis session as well. And I'll see you guys then. Goodbye.